Okay, let's dive right into what is honestly one of the most fascinating and, frankly, kind of confusing situations in the market today. Welcome to this explainer. Today, we're unpacking a classic case of mistaken identity in the financial world, but with a really fun twist. You see, both of these companies just released their first quarter earnings for 2026, and they both have absolutely compelling, yet entirely completely distinct growth stories. If you ever punched in the ticker Vertex and wondered why in the world you were seeing tax software on one page and, genetic therapies on another, well, you are definitely not alone. Here's our roadmap for the breakdown today. First, a tale of two vertexes. Second, VRTX tax and AI. Third, VRTX's financial performance. Fourth, VRTX biotech breakthroughs. Fifth, VRTX's financial performance. And we'll wrap it up with two paths to growth. Section 1, a tale of two vertexes. Right, so the crucial point here is that we basically have a $2 billion tax software company sitting right next to a massive biotech pioneer, and we are going to unpack both of them. In one corner, we have Vertex, Inc. They go by the ticker VERX. They're a B2B software as a service company solving an incredibly unsexy, but let me tell you, highly lucrative problem: global corporate tax compliance and e-invoicing. Then in the other corner, there's Vertex Pharmaceuticals, ticker VRTX. And they operate on a completely different planet, developing multi-billion-dollar therapeutics for really serious diseases like cystic fibrosis. Two companies, totally different scales. Let's break them down. Section 2, VRVX, Tax and AI. So let's start with VXX. They are going all in on embedding artificial intelligence to streamline some incredibly complex global tax workflows and really expand their e-invoicing footprint. They actually just acquired Brinta, which is this AI-first e-invoicing startup out of Latin America. But they aren't just buying up companies. They just rolled out the next phase of their own innovation strategy, injecting AI directly into the core Vertex cloud platform. And the goal here? It isn't just basic automation. It's really about early anomaly detection and making sure absolutely everything is audit ready. This is honestly a game changer because, based on their own recent research, only about 12% of organizations globally have fully integrated tax technology right now. And that brings us to this number, 4,895. That's the number of direct customers VRX has as of Q1 2026. And get this, it impressively includes over 60% of the Fortune 500. But what's even more staggering to me than the sheer volume of customers is the loyalty. We are talking about a 95% gross revenue retention rate. Even better, if you look at their top 50 customers by annual recurring revenue, the average tenure is 20 years. I mean, think about that. Once a massive global corporation integrates Vertex's software to handle its taxes, they practically never leave. Section 3, VRX, Financial Performance. Okay, looking right at the hard data, VRX delivered a really strong quarter. Stable retention and cloud revenue is just accelerating rapidly. Total revenue jumped 11.1% year over year to hit $196.65 million. But the real star of the show? That'd be their cloud revenue growth, up a very healthy 21%. This pushes their annual recurring revenue, or ARR, up to $687 million. They also posted an adjusted EBITDA of $44.1 million, which is a solid 22.4% margin. Now, they did report a GAAP net loss of roughly $2.5 million, but honestly, the underlying cash generation and that recurring cloud revenue, it points to a very healthy, very sticky SaaS business. And their future outlook is looking incredibly bright too. Management is projecting solid sequential growth right into quarter 2 and over $200 million in full-year earnings. For Q2 specifically, they're expecting revenue to finally cross that $200 million mark, landing somewhere between $200 and $204 million. And looking at the full year of 2026, they are targeting roughly $831 million on the top line, with a projected 25% growth in cloud revenue alone. But before we pivot away from the software side, we absolutely can't ignore their newly announced value creation plan. This is setting the stage for accelerated profitability by 2027. They announced this back in April, and the initiative is designed to generate between $60 and $70 million in fully annualized cash savings. But, it's not just about trimming the fat. Management made it very clear that these savings are going to be strategically reinvested to further transform Vertex into an AI-leading compliance platform. Basically, they're getting leaner so they can run a whole lot faster. Section 4, VRTX Biotech Breakthroughs. Okay, sharp pivot time. Let's leave the cloud software world behind and step into the high-stakes world of biotech. Founded in 1989, headquartered in Boston, this Vertex operates on a massively different scale. We're talking about treating serious diseases like cystic fibrosis and sickle cell disease. Remember how the software company we just looked at has a market cap of around $2 billion? Well, Vertex Pharmaceuticals is an absolute titan in the healthcare sector. They are pouring billions into scientific innovation to create transformative, literally life-changing medicines. I absolutely love this quote because it highlights how VRTX is successfully expanding way beyond their core cystic fibrosis treatments and into new, highly profitable therapeutic areas. Dr. Reshma Kewalramani notes here that newer drugs like Casgevy, which is their revolutionary gene therapy for sickle cell disease, and Jornavax for acute pain are already making massive financial impacts. They drove more than 25% of the growth this quarter. They're definitely not a one-trick pony anymore. Their revenue base is diversifying incredibly fast. And their pipeline? It's moving at breakneck speed. They're building what the CEO calls their fourth franchise in nephrology. For instance, they just completed their rolling submission for accelerated approval of a drug called Povetaxet to treat severe kidney diseases. They're also expanding the labels for their massive blockbuster cystic fibrosis drugs, Alyftrek and Trikafta, so they can cover even more patients. Plus, they are pushing forward with their Casgevy gene therapy to treat younger kids ages 5 to 11. The sheer momentum in their R&D pipeline is staggering.
Section 5. VRTX, Financial Performance.
Now, what's really interesting here is the sheer volume of revenue VRTX generates. Just look at this line on their official income statement. Almost $3 billion in product revenue in a single quarter, up 8% from last year. Remember, VRX, the software company, did about $196 million in Q1. VRTX, the biotech giant, pulled in $2.986 billion. That really puts the difference in scale into perspective, doesn't it? This revenue is driven primarily by their absolute dominance in the cystic fibrosis market, combined with those exciting new product launches we just talked about. And when we look down at their non-GAAP net income, it sits at an astonishing $1.14 billion for the quarter. I mean, that just proves their immense profitability. They aren't just generating massive top-line revenue, they are highly, highly efficient at converting that revenue into bottom-line profit. And honestly, this kind of cash generation is exactly what allows them to aggressively fund the next generation of medical breakthroughs. Because that brings us to this number, $13 billion. That is the massive pile of cash, cash equivalents, and marketable securities VRTX had sitting on hand as of March 31, 2026. That gives them immense firepower for future R&D. And get this, they actually grew their cash pile from $12.3 billion at the end of 2025 up to $13 billion purely through cash flow from operations. And that was even while they were repurchasing their own stock. It's literally a financial fortress.
Section 6. 2 paths to growth.
So let's put these two distinct paths to market growth side by side. On one hand, we have VRSAX driving incredibly steady, sticky, recurring software revenue. Once that software is in, it stays for decades, yielding a highly predictable run rate that's fast approaching $1 billion a year. Contrasted perfectly against that, we have VRTX playing the high-risk, high-reward game of biotech, driving billions through life-changing medical blockbusters. They're projecting around $13 billion in revenue for 2026, all fueled by curing diseases at the genetic level. Two totally different businesses, both executing brilliantly in their respective fields. So, I want to leave you with this thought to consider for your own research. Which Vertex represents the kind of growth you want to see in the market today? Are you drawn to the AI-powered predictability of corporate tax software? Or does the multi-billion-dollar cash flow of a biotech pioneer catch your eye? It's a fascinating contrast, for sure. Hopefully, this explainer has helped you finally keep your VERX and your VRTX straight. Thanks so much for joining me as we unpacked these Q1 2026 earnings, and hey, keep analyzing those numbers.